you actually have the option for your super to be taxed at 0%. In terms of the right structure, hopefully everyone can see this sort of dot I've got on the screen. But in terms of what I mean by structuring is that's actually the business structures available to you in Australia. And that's for doing anything like investing in shares or separating your assets out of your personal name. You can even run businesses out of companies and trusts, for instance. So we use that a lot with our clients when we're structuring their businesses, is incorporating companies and trusts into their family group. But another reason to incorporate trusts or companies is because of investment in cryptocurrency. Now, one of the big reasons why we might want to do that is this alarming tax rate here, where individuals pay up to 47% tax, depending on their income, but up to 47% tax. And I'll give some examples soon of some serious crypto gains and what the tax outcome could be, basing it in one of these structures. So moving along to company. Now, companies are taxed at two different rates depending on what the company does. If it's a purely investment company, so it doesn't run a business or a business of trading cryptocurrencies or a business of mining cryptocurrencies, so we will learn more about this as we go. But this 30% tax rate is passive investment, not active trading. That's the tax rate you'll pay. 25% is for what we call small business concessions. That's one of the concessions as a small business. So you need to have most of the company's income being small business income there to access this lower 25% tax rate. But as you can see, 25% is almost half of the highest marginal tax rate of an individual. So again, I'm not saying everyone just set up a company if you're trading, but that is something that we might consider if we were to advise you on what structure to use for your investments. Now, a trust doesn't necessarily not pay tax, but a trust gives its profit to other individuals or companies or other entities in the family group, and then they pay the tax on the trust's behalf. So we do have clients who invest through trusts, but they have to distribute at the end of each year the profits, and then the people who receive that pay the tax. Smsfs, we did talk about that earlier. There's two rates of taxes for Smsfs. 15% tax is what we call accumulation phase, where you're growing your balance in super throughout your lifetime. So the majority of Australians are in accumulation phase, and they'll be paying 15% tax on the profit that they make in their SMSF. Now, the 0% is for pension phase. So when you're drawing on your super, you're a certain age or older, and you've met the conditions of release for super, then you actually have the option for your super to be taxed at 0%. So it's almost like we don't even have to fly to the Cayman Islands to go and pay no tax. So do keep that in mind. Now, just some other things we look at when we're structuring is tax planning. So your ability to be flexible and proactive about your tax planning. We don't get a lot of room to move with individuals. We do in companies, trusts, and especially SMSFs with that very low tax rate. And the other one is asset protection. So we work with a lot of business clients at Inspire. Asset protection is pretty key with what we do. So we want to make sure that the business is not in their own name as a sole trader. We get some form of protection if the entities are set up right over here.